Making Tax Digital is set to come in from the 1st of April 2019. It comes in two different phases. The first phase is for VAT registered businesses with turnover exceeding their threshold of £85,000. A huge proportion of businesses still submit their data using HMRC's portal. Well, this was going to be closed. If you are a VAT registered business that is not using accounting software to submit your VAT return, you need to take action fast because HMRC are going to be closing their portal. It's not just that, you won't just be submitting your VAT return summary, so your 9 boxes of summary information for the quarter. What you'll be submitting is your VAT detailed report. This means they're going to have the line-by-line account that backs up the summary figures on your VAT return. Why do HMRC want this information? Well, I think they're hoping to increase the number of inquiries. And we've actually had an inspector confirm exactly that, being their expectation, that this part of the legislation will result in more VAT inquiries. The reason for this is that there are a number of businesses that do have what we call late claims on their VAT returns. So these are for invoices that are entered with earlier dates than the VAT quarter because they missed the last VAT return run. Also, they will see the activity between credit notes on sales and purchases, along with potentially any personal expenses that are being put through the business. At A4G, we believe HMRC will use this additional data to run through automated software to spot trends and pick out issues with your return. But more importantly, you need to meet the first criteria of being able to file your VAT return via digitally linked software. Phase 2 of Making Tax Digital comes in from April 2020. This is for any of you that are sole traders, partnerships, limited companies, limited liability partnerships, and even landlords earning above £10,000 a year. You will be required to submit profit and loss reports to HMRC on a quarterly basis, with the year-end kind of accountancy close down still being in place. So why do we think that they're allowing this 5th quarter submission? We believe that HMRC are hoping that businesses will produce their own quarterly accounts and submit them to them, with the accountants doing a year-end tidy up. And what that means is any of the adjustments that we make, so that might be provisions for costs, adjustment to incorrect records, tax planning adjustments, will all stick out on this 5th quarter. Now, a number of our proactive businesses are already engaged with us to do management accounts information on a quarterly basis. And they find it fantastic because it's giving them live information about their business, which is far more interesting than your year-end annual accounts that we send you. But it does raise concern about how much data HMRC are going to have on you and your business activities and trends. They're also going to add in a pay-as-you-go option of tax. That's very kind of them. You're going to be allowed to pay your tax early if you like. But I think this just suggests the way they're going with all these things is that tax payment dates will be brought forward. So managing your cash flow and working capital of your business is become all the more important. Don't worry, at A4G we have a number of solutions to help you overcome Making Tax Digital and to make it work for your benefit. Watch our next video on the solutions.